This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. And so what I want to do today is I want you to get in the habit of asking yourself 3 questions before, and this is for the pullback trade, okay? Meaning you've got a stock that you're interested in playing and you want to play it on a pullback. All right. So what I want you to do is ask yourself these 3 questions before doing a trade. And this, I think, is something, if you get into the habit of doing, you're going to reduce a lot of your mistakes, a lot of your bad trades. If you go through all 3 of these and answer these, I think it'll prevent you from putting on bad trades. So let's go ahead and get going on this. I'm using ON on semiconductor as our example. And I've got 4 charts up here, ON on a monthly, and then a weekly here, a daily in the upper right, and an hourly in the upper left. And the first question you have to determine is, what is the traded time frame? Okay, what is the time frame that I want to trade? Because if I'm going to trade off of a monthly chart, I'm a long-term investor who I'm going to use this as the trending time frame, but I'm going to enter off the weekly chart. Okay, so I'm going to use this as my trigger time frame, and I'm going to use this as my traded time frame. That's the traded time frame is the monthly, and this is the trigger time frame. So just keep those in mind. So if you're going to play off of a monthly chart, you have to have a different strategy than if you're going to play off of an hourly chart. Okay, so you want to know that, and your exit strategy is going to be different. Your trailing stop method is going to be different. You're going to have a separate, completely different strategy if you're trading off the monthly chart versus trading off the hourly chart as your tradable time frame. If this is your traded time frame versus this. So know that, have rules for each. There's nothing wrong with doing both, but what I'll tell you is most people are good at one or the other. They're not typically good at both. Okay, your personality might be the type where you're just not comfortable living through pullbacks. It just might not sit with you well. Now, I taught myself to be able to do that. Okay, I used to be in a situation where I couldn't stand a stock going against me for 1 or 2 days. Now I'll let a stock go down against me for weeks because I know I'm playing the big long-term time frame. I like to have a mixture. I like to have if I can, I prefer to have trades that are where the tradable time frame is monthly, tradable time frame is weekly, and tradable time frame is daily. If I can pull that off, that's great. I really don't have the time to do this is my tradable time frame because that's essentially an hourly and 10-minute. Every now and again, as I've shown over the past few weeks, I will do a 10-minute and a 2-minute, which is a pure intraday trade, which does not take very long. But an hourly 10-minute chart is a time-consuming intraday trade. So knowing that right off the bat, that's question number 1. Who am I as a trader is basically what you're saying. What time frame do I want to trade? Now, again, you can switch around, but you're going to be better. And what I would do is whenever I put on a trade, have your log sheet and put next to it either W, D, or hourly, right? Or monthly. And that is your tradable time. So you're going to put traded time frame up here. And put down whether it's a monthly trade, weekly trade, daily trade, or hourly trade. And then what you're going to do after about a year, you're going to go back and say, okay, how was I doing on the longer term trades? And how was I doing on the hourly trades? Now, it's going to fluctuate based on the volatility of the market and the trend of the market. So just because you have a period, like a 12-month period where you don't do well on monthly trades, it doesn't necessarily mean that's not for you. It could be the time, the condition of the market as well. But if you go through an uptrend in the market and you're playing monthly and weeklies and you have a year-long move, 6 to 12-month move to the upside, and you're not doing well in those time frames, it might not be right for your personality. So that's question number 1. All right. Question number 2 is there a trend on that time frame? And the way I define it, there's 2 different ways to define this. All right. Number one, am I above a rising 18 on that time frame? That's question number one. Am I below a declining 18 on that time frame? Is it flat, right? I mean, in this case, it's flat. I see no trend in this time frame right now. This is not a tradable time frame to me. Even though this might be the one that I'm looking at, if I were looking to trade off the hourly as my tradable time frame, I would say there's nothing here right now. Okay. Now, there could be a trade on the daily to the downside if this can rally up a little bit more. But I know I've got to look higher and see that there's a lot of support here. So I don't know that there's really a trade if I'm trading off the daily chart. Now, I can look at the weekly and I can see we're above a rising 18-month, and then I'm pulling back to a rising 18-week line. We are pulling back to a rising 18-week line. So criteria number one. So I can look at let's say my tradable time frame. Let's just look at this now. So let's say my traded time frame is the weekly, and I want to use the weekly as my trend and my daily as my entry time frame. All right. So if I'm going to do that, I know that even though this is going down, that's actually good because I've got an opposing trend developing on the lower time frame, and this is my higher time frame. So that's question number two. So first question is, what is my tradable time frame? Well, I want to play off the weekly chart. All right. I want to look for pullbacks to on a trend on the weekly, and then I want to trigger it off the daily. The second thing is that what is this trending? Well, I would consider it trending because it's above a rising 18. Now, if you want to be a little bit more conservative and more confirmation, you make sure that the 40 is also the 18 is above the 40 and both lines are rising. All right. So if you're a little bit more skilled, a little bit more advanced, you can take a trade like this where the 40 isn't exactly rising yet, okay? But we clearly have a pullback to a rising 18, and we have improvement on a momentum basis. So even though the 40 isn't rising yet, you could take that, all right? Now that would be in your rules. That would be in the guidelines for your trading, for your plan. But I would tell you, if you want to be a little bit more conservative, have a slightly higher win rate, make sure both lines are rising as you're pulling back. Now, question number three gets a little bit more complicated, but again, if you have some concepts written down, some guidelines, some rules, then you're going to be totally fine. And what I'd recommend is being consistent. So the question three is there momentum confirmation? Now, there's a number of different ways to determine that, right? And you could do it based on the MACD and the DI lines by themselves. You could make sure that the ADX is also confirming. But I would just tell you, I mean, there's a couple of different things we want to look at. So number one, let's say we make a higher high in price where we clearly make a higher high above this prior peak. So the minimum criteria is I want MACD to make a higher high as well, right? I want confirmation there. The other thing I want is the DI line to make a higher high. That we have, okay? So similar to the 18 rising, the most conservative on a momentum confirmation basis would be that we have MACD making a higher high and green DI making a higher high with price. I mean, obviously this is on the long side. So if we have that, then we can look to play a pullback. So that is where I would say that's momentum confirmation. Now, in most cases, when we have a continuation play like this, where this is not a reversal of the trend, but it is so this is a pause and this is a pause and an ongoing trend. And yeah, we come back and kind of reset these by pulling these back. But in most cases, what I want to see is when we go to a new high, I also want to see the ADX get back above 25 and then look to buy the next pullback. In this case, we don't have that. There's a few things that really bother me about this pullback that actually, even though ADX didn't get above 25 here, so you see this, I like this pullback better, this one, better than this one. And the reason is there's a couple of things. Number one, on the pullback, we're holding the breakout area. You see how we went up and went sideways and then we broke out And notice how green DI went up and held. So let's just clear this off. So green DI and held 25 as this pulled back and then made a higher high, and green DI made a higher high. So we have pretty good confirmation of holding the 25 and holding red. Then we pull back again. We come back to the breakout area and we're holding, and we have two moving averages that are rising, both time frames rising. We also have a pinch play here. Well, we have a pinch play here as well. But what we don't have is we're not holding the breakout area. It's clear failure of the breakout level. We do have green DI confirming, and we have this confirming. So it's not as clear cut. Now, I'll tell you one thing that I think is actually pretty important to me is I'm okay with this pattern. Higher high here and a higher high in green DI, as long as we're doing a reversal pattern. So if I get a reversal in the trend and I get a pullback, I don't care if ADX isn't confirming, because I know a lot of times it's going to lag, and green DI is going to get going and MACD is going to get going before the ADX can confirm. So in this situation, this is a great trade, because not only did it pull back, even though the 40 wasn't rising, we had a pullback to a rising 18. We had confirmation here, and the ADX was already above 25. We had a lot of confirmation on this pullback, even though it was really a reversal pattern or the start of a new trend, because we really hadn't been trending to the upside for a pretty long time. This has been trending, pause, trending, pause. So in this case, I definitely like to see the ADX going, but what I'll do is look for the price action. If the price action is holding this area and I've got green DI and MACD confirming, I'm probably willing to play this pullback. Now, there's another way to confirm this pattern, and that is on this pullback on the daily chart, we've got a ABC decline taking place. We've got a little bit of overrun here, but notice how ADX is really low during this decline phase. So for now, I'd still be willing to play the trigger time frame, because we don't have a lot of selling strength here. But I don't have confirmation on an ADX basis. So I'm giving you some things that I think are all in there. They're really personal matters. They're not, there's no right or wrong. You can trade this pattern. Some people can trade this pattern and say, you know what, I've got confirmation here and I've got confirmation here. I'm going to do this even though the ADX isn't confirming yet. Other people will want to wait for this to confirm. It's really up to you and your personality. And one thing you could do in your plan is say, if I only have this and this, but I don't have ADX coming out of a new a consolidation pattern, then I'll do a smaller position. I won't do as big a position if it triggers. There's no telling that this is actually going to trigger. It might not trigger. But if it triggers, then maybe I do a smaller position size in that situation. So I wanted to give you some things to think about, especially when it comes to momentum, because everybody's going to be a little bit different. But in terms of the traded time frame, you got to know who you are and what time frames work best for you. The second thing is you got to know whether there's a trend on that time frame or not. And the safest way to play is when we have rising moving average, both moving averages are rising and they're layered 18 above the 40, or the same thing going down, 18 below the 40, both lines declining. That's the safest trade. The other way to trade is to make sure that the 18 is rising or falling. If that's the case, then I can play that. But if that's the case, I do want to see some momentum confirmation in place. And then thirdly is the momentum confirmation. And again, I'm giving you a number of different criteria, because these are not simple things. If it were the same way every single time, trading would be pretty easy. Everybody would make money. I'm giving you a lot of minor nuances that are going to take place. And you have to determine whether you want to be a trader. In certain instances, the price action is going to tell you the most. In this case, it's holding the breakout. In this case, it's failing at the breakout. All right. So keep those things in mind. Go ahead and post any questions or comments, and we'll see you next time.